Hello and thanks for watching this Capital Creation podcast. I'm Dan Mellins-Cohen, online editor for Capital Creation, and today I'm joined by Andrew Sealey, the managing partner for Campbell Lutyens.
Thank you.
So how about we just start, if you tell us a bit more about Campbell Lutyens and where you fit into that.
Yeah. Campbell Lutyens is a specialist advisor in the area of private equity and infrastructure with two practice areas. One, advising GPs on raising capital as a placement agent, and the other area is advising banks and institutions on selling portfolios of either direct or indirect private equity interests.
So if we just start by looking at the key challenges, what would you say the key challenges facing first LPs and then GPs?
Well, probably in the year ahead, LP's greatest challenge is dealing with the extraordinary volume of fundraising proposals that they will receive from GPs. We've had a challenging fundraising environment over the last couple of years, and many managers will be bunching up their fundraising. So really starting over the coming months, the LPs can see more and more fundraising proposals. So actually dealing with that volume of activity is going to be a challenge. And then secondly, in conducting the due diligence on those proposals, trying to unpick the track records over this extraordinary period over the last couple of years to see where managers have been skillful, where they have really made money, where maybe they've been lucky or unlucky.
So you deal very closely with the secondaries markets. How have they been developing over the past 12 months?
Well, the secondary markets recovered very strongly after the financial crisis, and we've seen a huge increase in volume in the market, and probably this year it will top $20 to $30 billion of transactions. We've seen many banks and investment banks divesting their portfolios. You've seen fund of funds using the market and the attractive pricing environment to actually either sell tail-end portfolios or to rebalance their portfolios. You're seeing some of the US pension funds actively using the market as well. So you've got a high volume of buyers and more recently high volume of sellers, and now pricing is met, transactions are being completed.
Obviously, with everyone trying to catch up after the downturn, and even though, as you said, it wasn't as harshly felt in the secondaries market, how have regulations been involved in that? Have they made it harder? Have they made it easier because everyone's more brought into line? And has there been a danger of us perhaps becoming over-regulated?
Clearly, I think that if regulation executed in the correct way should be enhancing to the private equity sector. A better regulation should create more comfort for institutions to invest in the sector. However, I think people have been concerned that there will be over-regulation and that could stifle the growth of the business. On the primary fundraising, there was some regulations. There was potential for regulations to be put in place which could inadvertently damage the ability for GPs to successfully raise capital from overseas. I think some of those issues have been addressed, but not all of them. There's certainly a regulatory impact on the secondaries market, and we've seen it in the banking sector, where the tightening of capital requirements under Basel II and Basel III has meant that it's unattractive for banks to hold private equity, and then we've seen them selling, which has boosted the secondary market, but sadly it will hamper fundraising from banks in the future. The same could happen to some extent in the insurance industry under Solvency II, and other US and European regulations can both damage fundraising but also can slow up the development of the market.
So how have you found the crises in both the Middle East and Japan? How have they affected the secondaries markets?
They haven't in a significant way. I think that clearly there was a pause as people assess the greater risk associated with them. It would be difficult to do transactions in those particular subsectors. But generally, we've seen a good level of confidence in the secondary market and a pricing being maintained at the current levels.
And finally, obviously, you're going to be on a panel at Capital Creation. Maybe if you could just tell us what you're going to be discussing and perhaps an insight, a preview into what your opinions are likely to be.
Well, I'm on one of the secondary panels, and the plan was to talk about the different aspects and different opportunities in the secondary market. And many people are now familiar with the secondaries market, but we were going to go a level below that and look at the different aspects of it, to the opportunities to invest in direct secondaries, fund transactions between structured transactions or direct sales, the opportunities in different countries and different regions. So maybe go really to see where the best opportunities for investing in the secondaries market looking forward are.
Well, thank you very much for talking to us, but unfortunately we are out of time as much as I would like to continue. So thank you very much. I look forward to seeing you at Capital Creation. If you'd like more information on Capital Creation and all the speakers that will be attending, do visit www.capitalcreationeurope.com.